Hi everyone, it is David and Angie here from FTC, and in today's video we'll be explaining capital gains tax and sharing some tips on how you can actually pay less CGT. So what is capital gains tax? CGT is a tax that you pay on profits from disposing or selling an asset, including investments such as property, shares, and crypto. This profit is added onto your assessable income in your tax return in the year that you sell the asset, increasing the tax you pay. Now, let's walk you through a simple calculation. In this example, the taxpayer buys a property for $500K and sells it for $1 million. So in this scenario, we include capital proceeds of $1 million less the cost base, which is $500K, resulting in a capital gain of $500K. Now, this $500K becomes assessable and taxed at the relevant tax rates. If you are an individual on the highest income tax bracket, you will pay tax of 47%, resulting in a tax liability of $235K, which is almost half of the profit on the sale of the investment. Yikes. Now, we've seen many examples like this all the time, especially in Australia's property market. So it's really important that you utilize the tax concessions that are available to you. So if you are about to sell an asset like an investment property, it's typically in your best interest to engage in a tax advisor to help reduce this tax liability legally. Now, there are a number of CGT concessions and considerations that will ultimately impact the tax that you will pay. This includes utilizing tax losses, which you've incurred in the current year and in previous years, to make sure you report them in your tax return every year. Utilizing the CGT discount. So if you held the asset for greater than 12 months, the assessable capital gain is reduced by 50%. If you are a foreign resident, certain eligibility and apportionments may come into play. If it was your main residence at any point in time, that will also impact the overall outcome. So make sure you bring all these relevant facts to your tax advisor when calculating and determining your CGT. And then lastly, including all your costs. So in the example of the investment property, including stamp duty, conveyancing fees, agents' fees, etc. So just with that, ensure that you include and maintain all your appropriate documents so that you can actually claim these in your CGT calculation. Now, just remember that this is just a high-level overview of the main factors. So it's really important that you book a consultation with your tax advisor, go through all the details so that you can get the best tax outcome for you.
Also, Deb, just to add to that as well, I think if anyone out there is thinking of settling, it's probably better to reach your tax advisor before you do anything, just so you can understand and plan better what the next steps are going to be. For example, if you are holding an investment property, and as we'll see with the example, if you get a discount for keeping it for a certain period or a length of time, it may make sense for you to hold the property for a tiny bit longer to get other discounts. So I think you should be talking to your advisor before you decide to do anything. I think it should be your first point of call.
100%. And even in this particular tax year, perhaps, you're taking a break in the next financial year, then perhaps that's your best time to actually sell one of your investments and then utilize those lower tax thresholds, for example. But so revisiting the previous example, perhaps you had that conversation with your tax advisor and then they found out you did have some carry forward tax losses, in this example, 100K, and that you did hold the asset for greater than 12 months. So that 50% CGT discount was available, reducing the assessable net capital gain. So in this example, the tax liability reduced to $94K. So as you can see, the value of good tax advice can save you significant amounts of tax. So yeah, any other thoughts on that, Andrew?
100%. Yeah, like I said before, trying to do all this beforehand, because you'll be able to forecast all of these taxes that are coming up. Like once you sell the property, it's probably going to be too late to make any decisions about the investment property. So ideally, you'd want to make decisions and all these calculations before you actually engage a real estate agent and go through the process of selling.
100%. Cool. And then just lastly, I just wanted to highlight the potential tax liability if the asset was held by a different entity type. So as you can see in our previous example, the individual is taxed the most at 47%. If the asset was held by a company, then the highest tax rate would be 30%, and hence the tax liability would be $150K. For an SMSF, the tax rate is 15%, and hence the tax liability is only $75K. So you can really see why SMSFs are really popular at the moment. And then lastly, you have a trust, which is a bit technical and really deserves its own video. But in essence, there is more discretion or control on how much tax is ultimately paid. So perhaps comment down below if you want a video explaining that. But again,
and all of these, sorry, I'll just add one thing, Dave. And all of these entity structures are available to basically everyone. For example, if you want to open a company, there are a few different rules. If you want to open an SMSF or a trust, there are different rules, but these structures are available basically to everybody if they decide to choose it.
Definitely. So yeah, then this is a very simplified example of each of these different entities. Each has its own tax rules, they have their own tax concessions, like the CGT discount that's available to them. So again, it's really important that you get good tax advice when it comes to buying an investment in one of these entities, buying or selling. So if you're about to buy or sell a property and you want some personalized tax advice, please reach out to the FTC team via our website or DM us on any social media platform. We would love to help. So I think that's pretty much it for the video today. Do you have any final comments, Andrew?
Well, no comments from me.
Awesome. Well, that concludes the video. Have an awesome day, everyone.